About 4 years ago, I was driving home from work one day and I stumbled upon the term options trading. And I got really interested when I found out you could use it to supplement and one day replace your 9 to 5 income. So, not being totally content and sometimes questioning why I was working so much in a career that didn't provide a lot of joy, maybe you can relate to that a little bit. I jumped down the rabbit hole and started watching YouTube videos and reading books all about options trading. What I quickly realized is that there's a ton of information out there, which can be a very good thing, but it can also be super overwhelming. So, if you're brand new to options trading and want to get started in 2023, this video is going to show you the 3 steps you need to take, starting with finding the investment platform for you. Now, there are a lot of options to choose from. And back when I started, I read a few articles online very similar to this, very similar to this. And you can get there today with a quick Google search. But it's important to keep in mind that if options trading is what you want to do, like that's your long-term goal, you have to have an idea of the luxury that it is to give yourself a trading platform that can grow along with your skills. It's kind of like if you bought a brand new bike as a kid, and it's going to work if you're 10 years old just pedaling down the street. But if you want to do some trail riding as a 25-year-old, you're going to need an upgrade. And there are a lot of good options out there. Webull, Thinkorswim, Robinhood, really popular because they are so user friendly. And these platforms were really pushed in 2020 and 2021 when everybody started to seem to be trading from their couch. But if you want room for future growth, a platform like Interactive Brokers makes sense. It has good reviews, as you can see across these other platforms. Now, it does rank pretty well and has a number of pros and a few cons, but as a bonus for you, there are lots of videos on my YouTube channel showing you how to set up your accounts and make trades. I'll leave a link for how to download and set up Interactive Brokers on your own computer in the description for this video. The other great thing about Interactive Brokers is the super low fees they charge per trade. If you're trading in the US, you're looking at 65 cents per trade for options. And if you're in Canada, you're looking at no more than $1.25. So very small, incredibly small, in fact, when you compare it to the amount of a trading fee for a big bank or having a professional money manager managing your money for you. It's all about taking the power back and investing for yourself. The other thing that makes Interactive Brokers so attractive is the ability to paper trade in a fake or simulated trading account, as you can see up in the top right here. This is where you can go and trade with fake money, zero risk in the same environment that mirrors a real trading account, but you have no risk on the line. It is all fake money. You can practice before you start, get all the mistakes out of the way in here. And then if you want to check out how to do this and set this up for yourself, click that button right there and it'll show you the whole walkthrough video of setting this all up. Next, you want to learn the technical analysis. You have the understanding of what you want to do. You want to do stock options, but you need to know what's a bullish market, what's a bearish market, and which options strategy to use. You want to build that out and do this through technical analysis. And when I say that on the chart, what you're looking for is bullish patterns, something like this, where you can see a clear low here, and then you're making higher lows right here, and again, and again, and again. That's a strong bullish pattern right there, okay, going up there. And you want to understand the difference between that versus a strong bearish pattern where it's a negative, where it's you're making lower lows, right? These are the candlesticks showing the daily price of the stock moving lower. Okay, it comes back up, it moves lower again, comes back up a bit, moves lower again. So there's a nice negative or a bullet bearish pattern right here. So the difference between bullish and bearish, you need to understand number one, and you understand which kind of options stock trade you need to make in those type of environments because it differs. You don't want to be doing certain strategies in a bearish market, and you don't want to be doing certain strategies in a bullish market. Next, you need to understand what a stock option contract actually is. And as it says right here, it is a financial instrument or a contract, let's say, that gives the buyer or the owner the right, but not the obligation to purchase a given asset at an agreed upon price. It's either purchase or sell. In fact, you have a buyer and you have a seller in every options contract. And think of it like a farmer's market where one person's looking to buy a contract or sell a contract, and one person is looking to get paid to either give them a contract in either scenario. And the easiest strategy that I've found, especially for beginners, is what's known as selling naked puts. Okay. Normally, when you buy and sell in the stock market, you want to buy somewhere in here. And as the price goes up, you want to sell somewhere up here. You buy low and you sell high. Well, with naked puts, what you're essentially doing is agreeing to buy stock at a certain price within a certain expiration date for the contract. Okay. And if you want to do that, you're going to potentially buy the shares around here, maybe a little bit lower, right? But you're going to get paid to potentially buy these shares. And then you wait for the same thing to happen for the stock market or the stock price to appreciate and move up. and then you get paid hopefully on the sell on the upside. So all it's changing from normal buy low, sell high is that you get paid to buy low and you have to stick it out and wait and potentially sell high again when the market recovers. That's it. That's the only difference. And if you don't end up buying low, it means you get paid a little bit of premium, not buying any shares. And if you want to get an in-depth background of what selling put options look like and what they are, check out this card right here. It explains it in depth, walks you through it in about 10 minutes. Is a great technical breakdown of that strategy. But the other reason that I like to sell naked puts, it's the single easiest way that I found to also trade part-time. You don't have to be glued to your desk like this, looking at charts, looking at your portfolio 14 hours a day. You can do it part-time. You can even do it from your cell phone if you want to through the mobile app that Interactive Brokers offers as well. And I also believe everybody has the right to the information to change their financial future, which is why I created a course showing you exactly how to trade from your phone in 30 minutes a day, stock options, selling put options, a strategy that actually worked that I've been using for the past 4 years. And it just breaks down everything you're going to need to know about how to do it, when to do it, the basics, why it's so important. And again, 30 minutes a day from your phone if you want to. I'll put the link for this training course in the description of this video. You can check it out there if you'd like. The next thing you're going to want to do is practice your strategy once you understand. Maybe it's selling puts, maybe it's buying calls, maybe it's something else, a combination of a couple. When you have your strategy down, you want to then go ahead and practice. Like I said, you want to paper trade within the Interactive Brokers paper trading platform or whatever platform that you choose. You want to practice. There's no penalties. You're going to be able to track. You're going to be able to try things out and get comfortable with your strategy before you implement it for real. And you're going to get that proof of concept that helps you gain confidence and feel good about what you're doing. When you have success paper trading, then you can go ahead and put it out in the real world. But before you do that, you want to always make sure that you have an emotional handle on what's going on. I tell this and teach this as a 20-80 split. You want to have 20% of the strategy down and then go ahead and execute it. So 80% of the time, what's going to trip you up is your execution. You're going to question yourself. You're going to second guess yourself. You're going to get emotional in your trading. If you can hone in and limit that and work your system, you can eliminate a lot of the headaches and the common emotional mistakes that you make as a trader. So focus on the system and then get better in practice. 80% of the time is the execution that trips you up. When you have a combination of these two and you get good on both, then you're good to go and push it over to the live trading where you can go ahead and fund your account, but also make sure you start small because you never want to put in more than you can afford to lose. I've made that mistake before. I made two big mistakes as a trader. Number one, I used margin one time, which is just using borrowed funds from your platform more than you should have actually had invested. So if I invested $10,000, I was trading $20,000 for an example, and my account went from $10,000 of my own money down to $5,000 in about a day, real quick like that. So you can do that. There's risk there. The other thing is to not kind of borrow money to invest from other kind of sources if you're not comfortable with the risk. For example, my other thing that is I've taken money from lines of credit and put it in the stock market. So now if the market goes down, you're stuck paying some premiums, which I am right now, which isn't the best place to be. I'm kind of just paying monthly premiums on my line of credit and the stocks haven't recovered to the point where they're making money yet. So I'm just kind of playing this waiting game and money's coming out of my account every month, just waiting for this stock market to go back up. And I'm kind of burning through cash at the moment. It is what it is. It's a risk of doing that. If you're going to start small, fund your account, you don't have to worry about that kind of stuff. Only invest what you can afford to lose as well, because a lot of people make the mistake of going in too hard, too fast. Paper trade it, get your emotions right, live trade when you're ready with a small amount, start small, minimize losses if they do happen. Everybody loses a little bit of money in the stock market when they start. You're going to try to minimize that by starting small and getting your strategy refined as you move forward. The bottom line, use the cash you have and remember the two sacred rules of investing. Number one, don't lose money. And number two, don't forget rule number one. To keep learning and receiving videos just like this, subscribe to the channel. And if you want to see the quickest way to set up your Interactive Brokers platform and the essential things you need to have before options trading, check this out.